The global economy is once again on edge, rattled by a new wave of uncertainty sparked by Donald Trump's return to the White House and his administration's rapid imposition of sweeping tariffs on Chinese goods. Unlike the measured trade diplomacy of prior years, Trump's approach is swift, decisive, and disruptive, imposing tariffs on over $300 billion worth of Chinese imports in a matter of days. For many businesses, it's a familiar storm. But this time, there's a new tool in the arsenal: artificial intelligence. And unlike trade lawyers or economic advisors, AI isn't just analyzing what's happening. It's anticipating what happens next. Across the globe, companies are deploying AI to mitigate risks, identify new opportunities, and stay ahead of the turbulence. From manufacturing giants and logistics networks to small e-commerce brands and financial institutions, the shift is clear: artificial intelligence has become the go-to ally for corporate survival. In 2018, during Trump's first trade war, companies were caught flat-footed. Many relied on manual processes to reroute supply chains, manage costs, and revise pricing strategies. But in 2025, the story is different. AI platforms have evolved into sophisticated, real-time intelligence systems capable of responding to shocks instantly. One clear example is in the electronics sector. Companies like Dell, HP, and Apple have restructured their sourcing strategies using predictive AI models. When new tariffs were announced on lithium batteries, graphics cards, and other critical components, their systems immediately ran simulations on alternative sourcing options, calculating logistics costs, customs duties, and geopolitical risks. In less than an hour, entire procurement plans were rewritten, a task that would once take teams of analysts several days. AI doesn't just react, it learns. It understands patterns in trade behavior, government policies, and global sentiment. Systems trained on massive historical datasets can now anticipate policy shifts based on speeches, media coverage, and even social media activity. Natural language processing tools scour presidential speeches and State Department statements, flagging potential threats and opportunities before they manifest. This gives companies a critical edge. When Trump signaled new tariffs on Chinese electric vehicles, several U.S. automakers were already ahead of the curve. Using AI-driven market foresight, they had preemptively adjusted their import strategies, accelerated domestic battery production, and renegotiated contracts with suppliers in South Korea and Mexico. In the background, entire industries are being re-engineered by machine learning. Retail chains are using AI to revise inventory distribution in real time. Walmart's internal AI system, developed in collaboration with Microsoft, analyzes thousands of variables: shipping delays, fuel prices, port congestion, customs wait times, and tariffs, to optimize which products are shipped where, and when. That means avoiding East Coast bottlenecks and rerouting goods through more efficient hubs in Texas or Florida, where tariffs have a lower logistical impact. Meanwhile, Amazon's vast fulfillment network is now augmented with AI systems that can dynamically adjust prices based on shifting tariff costs. These models incorporate competitor behavior, customer demand elasticity, and supplier reliability to ensure Amazon stays competitive even under volatile cost structures. For smaller businesses, generative AI tools are becoming essential. Platforms like ChatGPT Enterprise and Claude AI are being fine-tuned by mid-sized logistics firms to draft trade compliance documents, simulate new sourcing routes, and generate updated business strategies within minutes of a tariff shift. No longer do companies have to wait days for consultants or trade advisors. Generative AI is also writing pitch decks, financial forecasts, and press releases tailored to the new tariff environment. For a small startup exporting consumer electronics from Taiwan to the US, AI drafted an entirely new business model that included assembly partnerships in Vietnam, rebranded product marketing, and a customer messaging plan, all in under 24 hours. In manufacturing, AI is driving a revolution in agility. Siemens, Bosch, and Foxconn are using advanced robotics and AI algorithms to adjust production lines based on changing input costs. If a Chinese-made sensor becomes 20% more expensive due to a new duty, the system identifies alternatives, evaluates downtime costs for switching, and updates the production sequence, all autonomously. This is particularly vital in industries like automotive and aerospace, where hundreds of suppliers feed into a single product. AI is helping supply chain managers not just identify alternative vendors but assess their political exposure, financial stability, and ESG compliance, all factors that matter more than ever in 2025's charged political climate. But AI is not just for logistics. It's reshaping the C-suite. Chief AI officers are now standard roles in Fortune 500 firms. These executives are tasked with integrating AI into every aspect of business operations, from forecasting and pricing to risk management and HR. In firms like GE, Caterpillar, and Procter & Gamble, the CIO sits next to the CFO, because in many ways, AI is now more essential than finance in navigating uncertainty. The investment world is also being transformed. At hedge funds like Bridgewater and Citadel, AI models are running millions of trade simulations daily, accounting for shifting tariffs, currency fluctuations, and international sentiment. These simulations influence portfolio rebalancing, sector exposure, and hedging strategies in real time. In one instance, a model detected an unusually high correlation between Trump's anti-China rhetoric and increased volatility in tech-heavy ETFs. The fund responded by reallocating $750 million into defense and logistics stocks, an action executed within 90 seconds of the analysis. JP Morgan has expanded its proprietary AI tool, LOXM, to incorporate trade data, social sentiment, and macroeconomic triggers. LOXM now offers instant reports to traders showing how tariffs are likely to impact interest rates, consumer demand, and corporate earnings across sectors. This capability is also reaching retail investors. Platforms like Robinhood, eToro, and Interactive Brokers are beginning to offer AI-driven tariff impact scores, helping users understand how a change in trade policy could affect their holdings. Even in real estate, AI is playing a role. As companies move supply chains closer to home, demand for industrial real estate in U.S. port cities is spiking. AI models are predicting where the next logistics hubs will emerge, enabling investment funds to buy land ahead of time. In Savannah, Georgia and Laredo, Texas, property prices have surged, fueled by predictive AI bets. The agriculture sector is adapting too. With China likely to retaliate with tariffs on American soybeans and corn, farming cooperatives in Iowa and Nebraska are using AI forecasting tools to model alternate buyers, predict global crop prices, and assess the profitability of switching to alternative crops. Drones and AI-powered sensors are adjusting fertilization and irrigation patterns based on new price models, making every acre more financially efficient. Globally, governments are getting involved. The European Union has launched AI platforms to help exporters calculate U.S. tariff exposure and identify at-risk markets. China's Ministry of Commerce is working with Baidu and Alibaba's cloud AI teams to map alternative trade corridors through the Belt and Road Network. The geopolitical ripple effect is massive. As companies and countries adapt with AI, the global balance of power begins to shift, not just based on resources or alliances, but on computational advantage. Whoever has the best algorithms, the cleanest data, and the fastest decision-making loop has the edge. But this AI-driven arms race is not without consequences. Some analysts warn of over-optimization. AI models may drive decisions that make economic sense in the short term but ignore human factors, like job loss, community impact, and long-term brand equity. An AI that says, "Move manufacturing to Mexico now," may not weigh the political backlash or reputational damage. Bias is another concern. If AI systems are trained on data with geopolitical slant or economic favoritism, they may reinforce existing power dynamics rather than challenge them. And with nations racing to develop their own economic ice, a new Cold War may be brewing, not over ideology, but over data, chips, and algorithms. Still, in boardrooms around the world, the message is clear. This is not a time for hesitation. Trump's tariffs are not just a trade strategy. They are a signal, a declaration that economic protectionism, nationalist policy, and rapid disruption are the new normal. Companies that wait for clarity will find themselves outpaced by those who act on AI-driven foresight. In fact, in this environment, AI is no longer just a business tool. It is a survival system. The companies that thrive in 2025 will be those that fuse artificial intelligence into every layer of their operations, not just to cut costs or speed up logistics, but to see what others can't. To predict the next move. To simulate the scenario no one else considered. To find opportunity in chaos. Because the future will not be written by those who wait for the news. It will be shaped by those who anticipate it. And in the age of Trump tariffs, algorithmic geopolitics, and accelerated disruption, that means AI.